what we have done little bit. We are almost on right track. Timeline ours is on right track. Okay, if you go with this, we have covered something with respect to a quick revision. I'm not going to do all the things. A quick revision that how here are the ways in which external auditors obtain audit evidence. Okay, these are the ways in terms of inspection, observation, inquiry, confirmation, recalculation, reperformance, and analytical procedures. Somewhere I will ask you all these things. We are not somewhere whenever we are doing the related questions and answers. Okay, inspection, observation, inquiry, confirmation, recalculation, reperformance, analytical procedures. Okay, this is what they have mentioned where we are using the which procedure. They will ask this much only. This much you have to be related to the exam scenario that has been given. Now, it is very much important that you should understand the difference between test of control and substantive procedures. Okay, test of controls is the effectiveness of the controls, and substantive procedures is the detailed procedure. They will test both your knowledge and skills. They previously called the students often confused and lose marks. Is it? It happens with everyone. It happens with me also. I am not different from this. Okay. We will look at a past exam on audit evidence and finance. What they are asking us? They are asking us the 4 financial statements assertions related to what they are saying, related to account balances. They are saying identify and describe. Okay, 2 things are there. The first part is you have to identify and you have to describe. They are not mentioning any example, nothing here. Okay, they are not mentioning anything here. They are just putting identify. Is that what they say? Note the requirement for 4 assertions. You won't get credit for more than 4. Fine. See, I am telling you this. You will ask me why I am telling you like this. If you know 4, you write 4. That's all. Unfortunately, 1 is missing. Don't worry about that. Okay, don't worry about that. Unfortunately, our target is, the first target is 50, and the second, this is the target, and the second target, inshallah, how much we can do, that is our best. Okay, but first we have to reach this point. That's very important. So when you are taking about 4, why they are saying you won't get, because if you are talking about 1 mark, you should not focus on 5 expecting that if all 4 are correct, they will not give anything for 5th one. Okay, they cannot give more than 4 marks. I am telling you this, I am cautioning you. Okay, I am cautioning you on this aspect very much. Okay, so otherwise what will happen? In another case, we will lose 1 mark. We will have 1.8 marks will be less there. 1.8 minutes. Okay, 1.8 minutes will be less there. That's very important. Read the question carefully. Financial statements regarding what? Regarding accounting balances. If you are asked for substantive procedures, don't include any test of controls. These they are cautioning us that be very clear, specific, focused. Okay, focused. Assume 1 mark per assertion and 1 mark for substantive test. We have done, if you remember, we have done accounting balances. Okay, again I will do. In 2, be specific your audit test. You won't score marks for general answers like discuss with the directors. What you are discussing with the directors, you have to mention. Okay, you are producing a program for you imagine you are producing a program for a audit junior. They need to be able to go and carry out the audit test using the program without having to come back. and ask you, is that what they are saying? See, that is the reason. You assume you are a audit manager, okay? You are a audit manager. You are giving task to the audit junior. Is that here? Now when you are giving, what they want to say that the instructions should be very, very clear. Instructions should be very what they want to do. This they want to. Instructions are very clear. Instructions should be stepwise. Okay, what is the first, what is the second? This is the way, this is the point where the students get trapped. Okay, this is the point. I am telling you, with all my students get trapped. They say that yes, we can write, people will come and say that yes, I have written all the things. But have you written in sequence order? That's very important. Have you written in a stepwise order? That is important. Okay, that's very important. A good way to present your answer should be 2 columns. This is what they prefer all the time. This is one of the policies of the ACCA. Is one of the this they will recommend. Okay, this you see the past answers, suggested answers. Is it right? Always they will put it in the column. I will also suggest that we have to do it in a columnary manner only. In the examination, you can insert a column. The moment you are inserting a column, 2 columns, automatically one side you have to identify, one side you have to describe. Okay, and fine, that is the one column they have to have the identify, and one column you have to describe. Now, what are the financial statement assertions? We have to do what we have to. We have missed one here. Is that they are talking in terms of what? They are talking in terms of accounting balances. Okay, what are the we have done? What is the accounting balances? How many assertions are there in the accounting balances? Any idea?
You said previously there are 5 and one is missing, right?
4.
Okay, for the account balances we have 4 only.
Okay, we have done this now. This is again we have done in the previous the one. Okay, see accounting balances. See, accounting balance should exist. Is it right? The balances, accounting balances exist in terms of at the period end. Is it right? When we are saying at the period end, it is closing balances. In terms of financial statements, okay, we are going to show in the financial statements. In the financial statements, where you are showing in the statement of financial position. In the income statement, profit and loss account, we will not have any account balances. Okay, in the income statement, profit and loss account, we don't have any balance. We will have balances in the statement of financial position, balance sheet. Is that existence in terms of assets, liabilities and equity. Rights and obligations, we have the right to the assets. I told you ownership. Okay, owners, account balances in terms of liabilities and obligations of the entity. Completeness, all the assets, liabilities should have been recorded as it has to be recorded. Is right? The last one is valuation. Assets, liabilities, equity include in the financial statement appropriate amounts. Is that this is where we are talking about that. See, it will come by practice. Okay, it will come by practice. It will come by writing. Okay, it will come by writing. It will come by practice. Existence. Now we can tell by seeing the screen. Everybody can tell. But only thing is you have to close your eyes and you have to think. Okay, you have to think. Yes, existence, rights and obligations, completeness and valuation and allocation. Okay, this is the first part. Likewise, I will also revise the other things. Okay, I will revise with respect to the presentation and disclosure. Okay, presentation, some are uniform, some will come in every other assertion, some will not come in every other assertion. If you go through my Word file which I have sent for the assertions, if I remember rightly, I have made a columnary way where it will occur in all the cases. Okay, something will be there in all, completeness will be there in all the cases. Okay, completeness. Okay, the description, the explanation will be different, but this assertion will be there in all the cases. Okay.
So
Likewise,
can you give us the suitable audit evidence for each assertion?
pardon?
Uh, Can you give us the suitable audit evidences for each assertion? So, for example, for valuation, I think normally we have to use recalculation and reperformance. And for right and obligation, sometimes we use confirmation and inspection of documents.
Okay.
So it will guide us.
As you want me to send me the word file, or you want to
But
explain me with example?
I mean, for each assertion, the suitable evidence.
Here I have mentioned it here now. Here you see on the right hand side. It is there.
No.
On the right hand side, property, plant and equipment, owner, own, lease, rent, in terms of rights and obligations.
I mean, the suitable procedure and audit evidence for each assertion. So it will be as a fixed rule for us to use it.
It is the fixed rule only. Is it? Is it the fixed rule? They will ask us for, see, they will ask us, na, this I have given you for your understanding, okay? If they, what is the suggested answer they have mentioned? What is the suggested answer? 1 minute. See, what is the suggested answer in terms of what is the second question? For each identify assertion, describe a substantive procedure relevant to the audit of the year. Okay. For each assertion, there is a substantive procedure. Where they have mentioned inventory, if they have mentioned inventory here, they said that audit of the inventory, year-end inventory. Is it year-end inventory? It is nothing but year-end balances. Is it right? It is nothing but year-end balances. Just correct me if I am somewhere. See, in the accounting balances year-end, is it? In the accounting balances year-end, what are the 4 assertions we had? We have 4 existence is there. You have rights and obligations is there. You have completeness is there, and you have the valuation and allocation. Okay, these are the things. Now what happens where they are asking us from inventory point of view? When they say from the inventory point of view, we have to think from the inventory only. Okay, we have to think from inventory only. They have mentioned, see the thing, the first part they have mentioned existence, and they have mentioned existence, the same thing, assets, liabilities and equity interest. Is it? Now what is the what we are doing about existence as example? Okay, existence of inventory. Existence of inventory. What we are doing for a sample of inventory items, what is the list, what we have mentioned in the list, and what it has been physically present. Then only we
So
say.
this is inspection.
Pardon?
This is inspection, right?
Yeah, it is an inspection for a sample of items of the inventory. Trace this to the physical item. This is nothing but the inspection. Fine? Are you clear about this?
Yeah.
Now, this they have given, okay, rights. The right entity, we will come across so many things. Maybe we will come across similar things for inventory also. This we have done. What rights hold controls, assets, liabilities, entity. What the inventory say when we are talking about, I sold, when we are talking about the inventory, we will have inventory. Is it right? Where we will have inventory? We will have inventory in our own location. Okay, we will have inventory We will have inventory at third party warehouse. Is that we will have inventory at a third party. See, you will take the space of the warehouse and you will hold inventory there. For any third party inventory held on behalf of the company, confirm the review of inventory listing that is not included in the year-end balance. What does it mean? Tell me.
Because they get commission from this.
No.
They don't,
Confirm the review
they
of
don't have
inventory
ownership.
listing that is not included in year-end balance. See, when you are talking about the inventory, okay, inventory, what happens? Definitely, when we say it's a inventory, is that what some inventory will be included, some inventory will not be included. Is that what we are doing? We are talking in terms of cutoff. I told you when we are saying it is a cutoff, it is in terms of date. Okay. Now we own inventory, fine. Own inventory we have done in the first case. Okay. What is the inventory at the third party location? Third party location we have to see as per before 31st is all the inventory has been taken into consideration or not. All the inventory before 31st and after 31st. Is that for before 30th? That's why I say review the inventory listing that this is not included in the year-end balance. If anything is related before 31st, you have to include. If anything is related to after 31st, you have to exclude.
So for the third party inventory, it will be considered as inventory for the company because
Yes, if you
they
have the
take
ownership, if you have the ownership, what you will do, see like this, I will go in much more detail. You are importing inventory, okay? You are importing goods. When you are importing goods from the yard, okay? From the yard, you will straight away take to the warehouse. Is that you take after the warehouse, what you will do? You will take it to the outlet, showroom, something like that. Is it? You are this is here the inventory you will count. Fine. You will say it is existing inventory list with the physical item. What are the things that happens at the warehouse? That is very important. That is also belongs to you. Is it right? That is also belongs to you. You have the right on that. You have purchased it. When you have purchased it, it is part of the inventory. Is it right? It is part of the. Now, the critical question is, the most critical aspect is whether the inventory which has been in the warehouse has been correctly, accurately taken into consideration or not. That is the only purpose. Whether we have taken all the inventory related before 31st is accounted or not. Yes, is accounted or not. That is very important. That is the reason we are talking about this. Is that on behalf of the companies, where come from the confirmed review of the inventory listing, that is not included. Sometimes what will happen? We have to think that yes, every other inventory has been, which inventory has been included and which inventory has not been included. Is it? Warehouse inventory is if you are having ownership, you have purchased and you kept in the warehouse, it should be part of your inventory balance in the financial statements. And it is, you have to see, it is at the third party, risk is very high. It is at the third party location, the risk is very high. If the risk is very high, definitely you have to take more precautions. Is it clear to you?
Yeah.
Completeness, okay? They have been recorded. All the inventory has to be recorded. Is it right? What we are doing, see, there are two ways. Is that the first and the third one, okay? It has been, I have told you previously. First, you are talking from what is there on the list, and you have to do it physically. Is it? When you are saying, when you are doing from the list to the physically, then you are talking in terms of existence. Okay, now, very interesting. Now what you are doing? You are doing from the physical to the list backwards. When you are talking about the things, it talks about completeness. You understand this? 2 marks are there. Very easy marks. Very easy marks. Is it that existence and completeness? Existence means you are taking from the list to physical. It is there in the inventory. It is there in property, plant and equipment. Wherever the accounting balances we are showing. Is it right? Wherever you are showing accounting balance, year-end balances, for property, plant and equipment also same thing. See, people should be very clear about this. When this is only a half, 50% you are doing here. Is that the remaining 50% you are doing from physical, what is their physical and what is the listing? It both are different tasks. Okay, both are different tasks. Okay, when you are doing it from physically to the list, means we are doing it, we are completing the process. Is that we are completing the process? That's what it says. Now you understand. I will highlight this. Okay, the first one is existence, the third one is completeness. The first one is existence. Okay, the third one is completeness. Completeness, we have to go back from where we have started. Is it okay?
Yes.
Valuation. Okay, valuation. Slowly. These are very sensitive. These are very sensitive topics, and you should likewise. If I mention you like this 1 and 3, then only you can be easily to understand. Valuation and allocation. Assets, liabilities are included in the statement with appropriate amount, and any resulting means there is any plus or minus. Definitely, you have to think about IAS2. Is that IAS2? IAS2 talks about two methods. Okay, exclusively two methods. If you are mentioning here IAS2, it add value anyhow. Is right? It add. In IAS2, they say that it is the lower of the cost or net realizable value. This is the methods of valuation of inventory. Is it right? This is the methods of valuation of accounting valuation with respect to IS2. What the valuation? We have to do valuation as per these two methods only. No other option. Okay, we have to do valuation as per these two methods, lower the cost or NRV. And this has been defined by where? This has been defined by IS2. What they say, review post-year selling prices for a sample of inventory held at year end to confirm that it has been valued. Post-year end selling prices. Okay, when we are talking about post-year end selling prices, after 1st of January. For sample of inventory to confirm that inventory valued at the, see what happens at any time, whichever is lower the cost of net realizable value. We have to know whether we have taken the lower the cost or the net realizable value. Is it? Whether we have taken the lower the cost or net realizable value. And we should know why we are taking this. Another important question is that why we are taking this. That's the most important. You should ask me, because inventory is the closing inventory. Is right? Now, when we say cost of sales, is right? When we say cost of sales, you have opening inventory plus purchases minus closing inventory. We are excluding closing inventory. Okay? Closing inventory is part of the current year, and the closing inventory is part of the next year also. Next year, this will become an opening inventory. Is that you should ask me that question, why closing inventory we have to take the year post year end. Okay, post year end means closing inventory and opening inventory should match. Okay, closing inventory and opening inventory should match. That is the right way of making a valuation and allocation. Is that this is the reason? Okay, the why it is post year end. Post year end means you have a, again I am saying this, is that closing inventory is very significant one, because closing inventory will be part of the opening inventory, and these two balances should match and they should be consistency. Are you okay about this?
Yes.
Okay. Again I am saying, okay, slowly, is that you will have enough time. Slowly, it should be existence. Existence means from listing to physical items. Rights and obligations, anything that has been in the third party. Okay, third party included. This is not anything which has been third party, which has not been included here. Completeness is from physical to listing back. Okay, valuation with respect to the post year end selling prices, in order to know that whether we have done as per the IAS to lower the cost or net realizable value. Are you clear about this lecture? Okay, again now I will very quick revision. Okay, very quick revision. We are talking in terms of audit evidence. We are talking about a financial statement assertions. Okay, when you are talking about the audit evidence, what we have done, we have said that in terms of IS 5. Now, you asked me last class, okay? See, they will not ask something. What they say, IS 500 audit evidence. Need to design and perform. This much you should. Okay? Need to design and perform all procedures appropriately in the circumstances for obtaining sufficient and appropriate evidence. Okay, I told you what is the sufficiency and what is the appropriate. Okay, one is quantity and one is quality. Quality, reliable and relevant. Okay, from where we are getting reliability, internal and external. Junior will be less reliable, senior will be more reliable. Oral will be less reliable, written will be more reliable. Originals will be more reliable. Photocopy, Xerox papers are less reliable. Okay, they have given the how we are going to get the audit evidence. Okay, a small concept, very easy one. Okay, it's a small concept and we cannot lose marks on that. Okay, next we are talking that is the first part. The second part is assertions. Okay, the second part is assertion. What are the different assertions in terms of classes of transactions, in terms of year-end balances, okay, and presentation. Okay, these are the assertions. Fine. Can I go to the next chapter? Any doubts are there? Tell me. Anything you want to be explained again? I am here to explain you. Yes.
No, fine.
Okay. Anything is there. Again, we will come back. Okay. See, I will have a system where we will come back at any point. Okay. I am keeping this. If you have seen the screens, it is there. Chapter 1, 2, 3, 4, 5. Like that, we have all the chapters. I will first rename it. Okay. This is chapter. I have divided chapter 7 under different parts. Okay. It is a very small things. It makes things very easy. Okay. It is chapter 7. Chapter 7 talks 7a, okay? It's not 7, 7a. 7b is also there, okay? What is the substantive procedures and what are the estimates? Okay, what are the substantive procedures and what are the how it have to be done with respect to estimates? Fine. Accounting, sampling, computer assisted audit techniques, and what is the ways of work with others. Now, hopefully, you have a complete comprehensive understanding. By the time we complete 7 chapters, we have completed almost more than 50% of the syllabus. The basics we have covered. Okay, now from here onwards, it is only application that starts. Okay, now you are asking me about examples. Whatever you are doing from here, it's only an examples or application that matters to us. Okay, now when you are doing the things, what we are doing, we are talking about what is discuss what is the substantive procedures in more detail we will do. Like we are providing examples how analytical procedures are used. Okay, how analytical procedures are used. Here little bit we have to very small element. Okay, about ratio analysis, very selected ratios. Okay, very selected ratios. Okay, we are not going to do anything. They will give you the results, and only thing is we have done little bit previously, but here also again we will focus on that. Is that this? What are the problems associated with the estimate? We have to estimate. Okay, we have to estimate. What we have to estimate? We have to estimate the material misstatements. Is it right? Performance materiality. Is it performance materiality? We are saying that performance materiality is 1% of sales. Is that you have to first before you do the things, you should estimate that how much will be the error, margin of error. Okay, margin of error. This is the first segment. Okay, the second segment is sampling. Why there is a need to sampling and what are the different types of sampling. One is statistical sampling, and again I am saying we are not working with respect to the core statistical concept. We are working understanding from the only financial perspective, financial angle. Okay, financial angle only. That's all. Okay, discuss what are the applications of sampling, how sampling will be tested. Is that discuss the results of statistics, including whether additional sampling testing is needed. If what will happen if there are more errors or more is that material misstatements, then automatically what we will do, we will increase the sample size. Okay, if there are more errors, definitely we will increase the sample size. Okay, and apart from that, this is something more is given. We are talking about computer assisted audit technique, CAAT. Okay, is that how? And now this is something different. Okay, you are talking about something with respect to test data and audit software. Mugit, just remind me before the close of the class. Okay, I will send you those links and I will explain you to everyone how to do that. Okay, just remind me. I told you now, just remind me. I will tell you. Okay, to everyone. Discuss the see what is the examples of the test data and audit. So if you take the current scenario, is that it current scenario, most of the audit firms, I can say the big 4 audit firms, as the second layer, okay, as was the second layer, and I can say the third layer also. The third layer means the smaller company audit firms. Most of the people use audit software. Okay, most of the people use audit software. When you come across this, is it that when I think in your firm, in your banks, in your institutions, in your organizations also, most of the organizations will use audit software. Through software only we are going to. That is the reason when we are doing this, they use some way data analytics. Okay, they use the word data analytics. If when you are using the data analytics, how, see, we cannot summarize all the things. If you take the Excel, is it right? If you take the Excel, I don't know if you are familiar with this, you will have a dashboard. Is it? You will have a dashboard. You create a dashboard for yourself, okay? You create a dashboard for yourself. You are going to reflect in that graphs, pictorial diagram. You can add as many graphs as possible, okay? You can divide the screen, okay? You can divide the screen and you can create a dashboard where it will be shown in graphs, okay? Something sales, it will be shown in graphs. Something profit and profit after taxes, it will be shown in pie diagram. Somewhere it will show in the bar diagram, okay? Somewhere it will be shown in stack diagram. You can use the dashboard to the extent possible. Is that is the reason when you are talking about the information technology, how IT is going to be playing a significant role in that, okay, in terms of audits are that. Now this is the third element, okay. I am dividing it all into three sections. Work of the others, okay, work of the others. Mostly when we say work of the others, they have mentioned very clearly work of the experts. Somewhere 2 marks. I will not give more than 2. I will give only maximum 2 marks, but it will be there, okay. If it is, see, don't say you are an audit senior, okay. You are an audit senior. You have outsourced the job, okay. You have outsourced the job to the expert. He has done the work, but the ultimate responsibility lies with you. Is that it lies with you? You cannot say that expert has done and it's fine. You should know. You should not only know that expert is qualified, experience, have the knowledge, but also you have to review the work of the expert. Because ultimately you are signing the audit report. The expert will not sign the audit report. We will discuss that. Is that it is little bit interesting also. Extent to which external audit are able to rely on the expert, including the work of internal audit. Whatever the internal auditor is doing, you have the responsibility to review. How we have the responsibility to review is a simple example is we are talking about test of controls. Controls is the responsibility of the internal auditor. But what the external auditor will do? External auditor will test the controls. Means it is he's nothing but reviewing the work of the internal auditor. And audit consideration relating to entities using service organizations. If we are using any services, is it right? What are the things we have to consider in terms of tax audit, in terms of valuation, anything as such. Okay, what are the audit consideration? And explain to the extent to which reference to the works can be made in the reference with which reference to the work of the others can be made in the audit reports. Most important, when we are giving, see, the responsibility is mine. Is it right? The responsibility is of the auditor. Even you are giving it to the expert. Means you can say the ultimate responsibility lies with the auditor only. How we are dividing this chapter? We are dividing the chapter with respect to what? A simple concept of analytical procedures, is it? Substantive procedures, analytical procedures, and estimates. The second concept we are talking in terms of sampling. Is that sampling takes a bigger role, okay? Sampling takes again when you are having the sampling, in the sampling we are also talking about how we are using the computer assisted audit. You put this as a topic number 3 and you change this to topic number 4. You change this to topic number 4. Now you will have very clear understanding. Divide the things. In the while, see, now I am telling you, while preparing exams also, take one topic, divide, okay, take one topic, focus. From one topic to another topic, give break. Okay, give break, at least 2 minutes break, minimum 5 minutes break. Just close down, have a break, and just give 5 minutes break. Then you start the next topic. It will be more clear. Continuously, if you do back to back, now it makes things little bit more difficult. Fine.
So
now,
what are the other three?
which other three?
The first one is substantive procedures, right?
Yes. The second one is sampling, na?
And the third one?
And the third one is computer-aided assisted techniques. You are
Okay.
seeing on the left-hand side?
Yes.
And the fourth one is, we are talking in terms of work of others. This is the way I will plan my chapter. Okay, this is the way I plan my chapter. Separate the things. This is not there is no suggestion. It is my way of planning the things. You divide the chapters into subtopics. It will be easy because substantive procedures, sampling is different, computer-aided assisted techniques is different, work of others are different. All four are different topics. Okay, all four are different topics. Is it okay with you? Is it clear?
Yes.
Right? Next. Slowly, is it? See, read once, but read with all understanding. That's very important. Understand one? Read the first time reading, the first time understanding is very important. Is it? The first time reading and first time, don't rush. Even if you observe, if I read fast, I cannot follow my own words. Very simply, I am saying, if I read fast, I will not follow. I cannot be in a position to explain. So I will take time to read as slowly as possible. What it says, this is if you are talking about this is one of the way of documentation. Is it right? It is one of the way of documentation, and this way of documentation is called as a flow chart. I will cover this at a later stage. Okay, this is flow chart. Is there? What are the things? They are talking about the sampling. They are talking about the computer-aided assisting techniques. They are using the work of others. Okay, they are using the work of others. Fine. Now, when you are doing the things, here what they say, see here you make it a point. They are divided. Is it right? They are talking about, see, 1, 2, 3. This is, they are taking the audit of accounting estimates and auditing of smaller entities. Is it? This is 2.1, this is 2.2. Okay, this is 3.1, 3.2 and 3.3. Fine. Slowly, what we are doing, we are covering the things chronologically. Where we are here. Where it will come in restrictive substantive procedures. Now you can see these are the things we have covered. We have to cover the next part. Okay, these are the things we have to cover. Means when there is a test of controls, if it is satisfactory or not satisfactory, we have to do restrictive procedures, substantive procedures. If it is satisfactory, we will do restricted procedures. If it is not satisfactory, we will first we have to report to the management, then we will do full substantive procedures. Okay, this slide will be there in every chapter. Is it right? This slide will be there in, it shows where we are heading. Okay, what are substantive? Now in more detail. It is nothing but it is the test to obtain evidence to detect material misstatements in the financial statement. It is the test. We see, you have to make sure that I told you from beginning till the end. Is it? From beginning till the end, from the general entry till the financial statements. You have so many different stages will be there. You have so many different stages will there. At each stage we are working out with the financial. From here, financial statements till publishing. Till publishing. You will have so many other things. Okay. Now, what is a substantive means? You should get as much information as possible. Once one event, multiple evidences. Simple way. Understand one? One transaction, one balance, multiple evidences. To know, to detect what? To detect the material misstatements. To detect the material misstatements. Now, so there are two types of substantive procedures. The first is test of details. The second one is substantive analytical procedures. In the question, they will ask very clearly, is that there will not be any ambiguity, any confusion will be there. Is it? What is the test of details and substantive analytical procedures? This is a useful model for preparing an audit plan. What we are doing, how we are doing substantive procedures. See the thing. The first and foremost, opening balances with previous year working papers. In simple ways, current year opening balance with previous year closing balances. The first thing that matters is that whether we have carried forward closing balances as opening balances correctly or not. Even you are doing by software, okay, even by you are doing by software. Everywhere software is not there. Is that it is a global qualification. Every country you will not have this. If you are having this or you are not having this, is that irrespective of that, most importantly, you have to take the previous year working paper. Which working papers we will take? Permanent working papers or temporary working papers? How many types of working papers are?
Current and permanent.
Yes. Is it working? Why working papers? In the working papers, all the details will be there. Is it? All the details will be there. All the working notes will be there. Okay. Next, once you have taken that, is that it is a structure. It has been given. See the thing stepwise. Put the numbers. Review general ledger for unusual records. In the question answer sessions, this will be little bit different also. Understand what? It will be more or less, it will be same, but some more additions, some more new perspectives will be there. Now, review general ledger for unusual records. If there are some what will happen, you will have your balances. Is it right? What unusual records is nothing but, most importantly, you have to think in terms of closing balances. Is it? Closing balances. Closing balances also, what you have to do, you have to take last 15 days. Any unusual transactions happen. Is it? Unusual transactions happen. Unusual events have happened. Okay? Unusual events have happened. That is the reason why what we'll do, you are comparing with the current year with the previous year. Okay? You will see what are any unusual transactions. Last 15 days. Any unusual. Next current year first 15 days fine. That is not that much going to be highlighted. But the transaction for last month, last 15 days, you have to be very, very careful. This is the second part. Agree client schedules to ensure completeness. You are preparing. What you have to do? You have to agree client schedules or two from accounting records. Is that what are the client schedules are there? What are the clients summaries are there with our accounting records? Is that it is the third party. It talks about what when we are talking about the thing, the reliability will be more. Is it? The reliability will be more because these are the external. Okay. You are comparing the external source of information with the internal source of information. Is that? Good. Now, the fourth one, carry out analytical procedures. Analytical procedures means take an example. Is that? Take an example of depreciation. You have to calculate what we have done in the current year and what we have done in the previous year. Anything. You take depreciation, you take equipments. Is it right? Equipment, what are the additions current year, last year? What is the amount that has been happened? If the depreciation has been increased, definitely there will be some addition. There will be some disposals will be also be there, additions will also be there. Is it right? You are analyzing what is happening in the current year, what has happened in the previous. There should not be that much difference. Okay, the difference should be if difference, the difference should be reasonable. Is that if there is sometimes unreasonable, sometimes fluctuations happens. There is no hard and fast rule that we should have always reasonable difference. There will be sometimes unusual differences will be there. When there is unusual differences, first you have to get the evidence from yourself. Then first you have to get evidence from yourself. Okay, you have to get evidence from yourself. Means you have to do your own exercise. Okay, then second you have to discuss with the management. Is that? Third, if really it makes sense, then you have to get a confirmation from the management. If it is material, see, whatever is there, whatever is happening, it has to be come to the notice of the management. Small thing, large thing. Is that the material misstatement? We cannot come to a conclusion, and we cannot take any responsibility for that. Okay, you have to inform, even small or big, everything has to be communicated to the management. Is that analytical view? In analytical view, we are in some cases we will we will analyze. Okay, what is the current ratio this year, last year? What is the profit after tax this year to last year? Likewise, a few selected ratios we will make an analysis. We are not doing any analysis. We are interpreting the data as such. Okay. Test transactions in detail. In detail. Take example with respect to purchase. Purchase means it has to first what happens, just go through in detail. If you want to purchase an asset, okay, if you want to purchase an asset, what happens? First you have to send a proposal, okay, by responsible person. Then the proposal will have to be approved. Is it right? If it is a big amount, it has to be approved by the board of directors. Once you have been approved, you have to place the order. Is that? Place the order. See the thing, this is nothing but in detail. Once you are saying placing the order, you should have an approved list. Is that? You should have an approved list to whom we can place the order. Once you have placed the order, you will get the invoice. Is that? Plus or minus it will go. Is that? You will get you should ask for a quotation. Is that? You should ask for a quotation. I will put like this. Is that? Then you will get an invoice. You have to get the approval for quotation. Is that? Then you will request, then they will deliver, then you will match what we have placed and what we have received. Is that? Goods received note. Is that? Good received note. If you remember, the good received note should be in the 3 pages or in the 4 copies. Is that? One should be with the inventory, one should be with the client, one should be with the accounts department. Is it? Likewise, you should have 3 copies of 4. Now, if you take now in the question answer, they say it is going to be 4 copies. Okay, 4 copies. Fine. Goods received note. Based on the goods received note, you should have the payment process. Once you have the payment process, you should do the reconciliation. You should get an acknowledgement that we have received the amount. then it has to be shown in the balance sheet, sorry, bank statement. Then you have to do with the bank reconciliation statement. Now you are talking about, see the thing, this is nothing but test in our transactions in detail. If you are putting like this, is it right? This is not one point. This is almost a one answer, I can say. Understand point? This is one complete answer from the approval till BRS. It is an answer. Is it right? It answer for 5 marks.
Control, right?
Pardon?
This is test of controls, right?
Yeah, test of controls. Yeah, you are not only testing the transactions in detail, we are testing the balances also in detail. Closing balances with opening balances. See, now test balances in detail. I will give another example for you. You will have a receivable. Are we having receivables only from one client? No. You will have some from the multiple sources. You will have receivables from the multiple, you will have multiple people who have supplied you. Okay. Now we have what we are doing. For every other supplier, there will be a control account will be there. You are testing the balances. You are getting the confirmation. You will send the confirmation to sample of people, sample of suppliers, and you will get confirmation. Again, I will tell you this, you will have positive confirmation, you have a negative confirmation. Okay, review, and once it is done, it has to be, you have to review and presentation of the disclosures in the up. Means we should not stop, we have to make sure that till the end things have been in place. The F8 exam almost invariably have a question on substantive procedure. They will give one question if you take the mock exams. What they are doing? They are giving it for 20 marks. They are giving it for 20 marks and dividing. Is that they are talking about the inventory. What is the inventory for substantive? What is the procedures for property plant? What is the procedures for receivables? What is the procedure for cash? Now what they say here, they have mentioned, see the thing, they are talking about the procedures. From here it has to be very, very specific, only applications, okay, only applications. We have covered theory to the maximum. Describe substantive procedure you will perform to get evidence from what they are saying in terms of trade receivables. Is it? While designing the test, you have to be very specific. Is it? What is substantive test and what is the test of conduct? Another issue to consider, which is very important, financial statements assertions you are testing. The examiner will test you whether you understand the assertions and how different tests are used to provide evidence to support them. We are doing recalculation, reperformance, analytical procedures. We are doing inspection, inquiry, observations. Okay, these are all evidences. Is that? These are evidences. These are all the evidences which will support substantive procedures. Is that? These are all the evidences: inquiry, observation, inspection, recalculation, reperformance, analytical procedure, and what is the 7th one?
Any query?
Inquiry, I told, I think so. Okay. Likewise, okay. The moment you repeat again and again, automatically it will get into our memory. Okay. Somewhere we'll miss, but we have to be very specific. Okay. You are an audit junior. See the thing. This is very important, and I will focus on this all the time. What is your position is very important. Automatically the responsibility comes with the position. Audit junior, responsibility is less. Audit senior responsibility is more. You have been assigned, they have given you a task to audit field work. Which type of things we have to do? We have to do non-current assets. Is it? Here they have mentioned, we'll do this. Is it? They have mentioned about the trade receivables. Is it? You have the non-current assets. Non-current are of the client financial statement. Can you think some suitable substantive procedures which are a mixture of? It should be details and substantive analytical procedures which you are going to use it.
When you say test of details, you mean test of controls?
No. Test of controls is completely different from test of details. Okay, don't mix up the thing. Test of controls is only we are taking the effectiveness of the controls. That's all. Stop there. Full stop. Only effectiveness, whether controls exist or controls don't exist. Controls are effective or controls are not effective. Full stop. Period. That's all. We are not going beyond that. Test of details. Test of details, we are collecting evidence here. Is that we are collecting evidence here. We are collecting as much evidence as possible. The name itself says there is a clear distinction. There we are talking about test of controls. Here we are test of details. We are testing the details. The client will provide the details. Again we will test whether the details has been sufficient and appropriate. Is that test of details? Yeah, I am giving you evidence, is it right? But you will also cross verify that evidence. Is it? Cross verify that evidence. Is it right? What they are saying, see the thing. When you are talking about test of details, the table sets out various substantive procedures you might use in it is not an exhaustive list. What is the test of details and what is the substantive? Selecting a sample of assets from the asset register and physically inspecting them. Is that what we are now we are seeing the thing. Now coming to the non-current assets, is it right? Non-current asset, the first stop, the first entry will be the asset register. The source, I can say like that. This is the source. Is it right? This is the source. The first documenting source for non-current assets will be the register. Is it? First time you are covering this. Is it right? We will say that till now we are talking about the accounts. Accounts come second in the test of details. Test of details, you will say what is the asset, what is the computer, what are the specifications, for how many, what is the rate, what is the unit price, what is the warranty, how much you have paid, what are the terms of invoices, everything will be there. When it has been purchased, what is the life of the asset, everything will be there. That is the test of details. Asset register having every other thing. Test of details. All information will be available in the asset register. And once you have the adjust, you will physically inspect them. This is the test of details. What is the substantial procedure? Performing proof in total test on depreciation charge for the year to confirm the accuracy and reasonableness. They have calculated, client has calculated depreciation. Is it right? Client has calculated depreciation. Again, what you will do, you perform proof in total test. You will again recalculate. Is that what you will do? You will recalculate. Is that you will recalculate the depreciation charge for why we are recalculating only to confirm its accuracy and reasonableness. Again, I will ask, the moment I am explaining, I will ask you the things. Okay, if you understand these first few slides, other things will be very, very easy for us. You will not have any confusion. You should not have doubt at this stage. That is my concern. Okay, this is the proof. Now, second one, what your test of detail? sample of physically inspected asset. We are not stopping with only this one. We are continuing here. Is it right? We are test of details and tracing back to the non-current register and ledger to test completeness. What we are doing, see the thing. Now you will understand. First, we will start from here. We will say that what is the register and what is physically inspect. Now, what we are doing, this is the first process. Second process, we have to go back to know the completeness. Okay, I have taken the register. I will go and inspect that. Then there only, I am not saying that, there only you have to cross check whether whatever has been happened, opening balances, closing balances, completeness is there or not. Okay, completeness is there means again we have to go back. Select a sample of physically inspected assets. Okay, what we are doing, we are sample of assets and it is physical. Whatever the assets we have physically inspected, we have to trace them back to the register, and not only register, what we are doing, we have to trace back to the ledger account also. Is it property, plant and equipment? Means now you are expanding your scope. Okay, this is the test of details. You are expanding. First you will inspect, then you will go back to the register, and you are adding another variable. You are talking about the ledger. Okay, you are talking about the ledger. You are getting more details. So what it says on the other side is that comparing additions in the year to the prior year and investigating reasons for any big difference. Additions in the year to the prior year. Is it right? Additions in the year to the previous. We are talking about the current year and the previous year. And if there are any differences, is it right? What are the reasons? Whether they have added, they have sold. Is it right? Mostly they have added addition. If normal, see there is a policy will be there. Okay, fine, it is 5% additions. You will not have any issue. But assume there is a 50% increase in non-current assets. There should be some reason, okay? There should be a reason that it has been increased by 50%. Is it an investigation, any big difference? This is the second point. Tracing a sample of additions. Is it? Once we are doing this, any additions in the year, and again, when you are talking, if there are details, okay? If there are any additions are there, what you are going, you will see the additions and you will go to the purchase invoices. Is that you are going to the purchase invoices. Divide this, okay? Divide this, okay? Divide this, okay? First read test of details, then you read substantive analytical procedures. Okay? In the question answers, they will ask substantive analytic procedures separately, test of details separately. So what my advice is, first go only for test of details. Okay? What you are doing, if there are any additions, definitely you will ask what are the additions. There are any supporting document is there. Is that there supporting any document is there. You will take with the purchase invoices. What you will do on the other side, comparing ratios of depreciation with previous year. Here we will see if there is any additions, is it right? If there are any additions, what will happen? If there are any additions are there, automatically what will happen? The depreciation amount, is it right? The depreciation amount will increase. Additions are increasing, the depreciation amount will increase. Is it? Their depreciation or if there is any change, they have changed from straight line method to written down value method, something like that. Okay, discuss. We are not writing this. Comparing ratios of depreciation to non-current assets with what we have done previous year, what we are doing current year. If you take this one also, it is a part of analytical procedure. You are analyzing what is current year depreciation with the previous year depreciation. Is it right? Current. This is also an evidence. Is it? We are talking in terms of depreciation policy. Reconcile automatically the last one. Is it right? We have what we are doing. We will reconcile. Reconcile non-adjust register and the what how much you have shown in the non-current asset register and how much we have shown in the general ledger. Are you
But we
clear
already
about this?
compared with the ledger.
Pardon?
In step 2, we already compared with the ledger. So we have to inspect in general ledger as well.
Point number 2. Here we are talking in terms of completeness. Is it right? Here we are talking about the completeness. Here we are reconciling.
Okay.
Reconciliation will be there. Okay, reconciliation will be there. Okay, here we are see what we are doing. There in the point number 2, we are physically inspecting. Here what we are doing, we are talking about the non-current, all the final balance. Okay, okay, the closing balance. Here we are not talking in. We are not talking in terms of. We are talking what we are doing here. Here in this case, we are talking in terms of closing balance. Reconcile the non-current assets. Is that you will have so many things in the non-current asset register. Is it right? You have the register, and you will see what is the general ledger. Is it right? There are so many things here. You have what will happen. There is something with respect to property. Is it right? There is something with respect to property. There is something with respect to plant and equipment. Is that we will not have any one. We will have multiple properties. You will have, if you sell property also, you have the land, you have the buildings. Is that you have the land, you have the building. What you are doing, you are reconciling the land, buildings, property and equipment from the register, and you are comparing with what? You are comparing with general ledger.
So can we compare with the with ledger instead of reconciling with general ledger?
What is the difference
Because
between what is the difference between ledger and general ledger?
Ledger for a specific account and general ledger presents the transactions of all accounts.
Good, that's all. Is that transactions of all accounts? Okay, all specific accounts. Okay, all specific accounts. Now what happens? You will have so many ledgers. Is it right? You have so many different ledgers. But by the time you are going to this stage, is it right? Going to this stage, we are accumulating. Is it right? What we are doing? We are accumulating. We are adding all the things into one. Is it right? We are adding all the things into one. In the point number 2, is it right? In the point number 2, we are talking about the ledger. In point number 3, we are talking about in point number 4, we are talking about the general ledger. Is it okay?
Yeah.
Right? Can I stop here?
Yes.